Welcome back to RLTW Strategies. I'm currently in a trade. It's 12:30 and I want to get you in the market to show you what I got going on. So I just entered this short and I think it's going to come down to this fair value gap. So I saw this fair value gap. I drew it out earlier this morning when I did my levels. No. I don't think this is a fair value gap. This is just a low volume, high volume area of activity that I saw on the trading view chart. We're gonna watch this play. I don't have a stop in. If anything, I was gonna pull my take profit and put it here, but we'll just go ahead and watch this come down to middle of the fair value gap. I could move it down to the top of this box and I can move this down to the bottom. Here's the fair value gap. I drew this on the 30-minute, I think. Right here. So if you extend it, that's a fair value gap that I saw. This is just the point of, I call it contention, or it's where price hesitated on the way up. So we could come down and hit this area. We could also bounce hard on this box, but it will take me out with $225, which I'm happy with. As you can see, we're already up on the day, $2,200. We could come down this fair value gap after we get through this area, but we'll see. I'm on one contract going short. I played this area right here all morning, and yeah, so we could come up 50% up to here before going back down. It is 12:10. Usually the market kind of shifts its rotation at noon, but we'll see if we continue dropping lower. Yeah. We'll see if we continue dropping lower. It looks like it's going to take me out though. I sense it's going to take me out. We will see. Again, it's only one contract. So I did a majority of my trades. I think I was up 900 last night shorting gold. I posted that on X, and this morning I woke up during pre-market and I was up 1100 on the day. So since market open, I made about 1K trading the market. Okay, we're out 2489. Now I'm just gonna wait to see if we reject this area right here. So if we reject that area, we'll go ahead and watch the 100 tick chart. We'll see if we do a pivot up here before coming back down. Again, this purple box is just what I drew from stuff I saw back here on this day. So it is 12, it is noon. I know I haven't done a video in a while, and I just wanted to, capture some trades so you guys could see what my thought process is when I enter, how long I'm in it, how I scalp it, and then how I get out. So I really don't want to do any major trades. I do want to go in big with the large lot size, but I'll wait for a reversal, and I'll wait to see what happens when we break through this area of congestion. So right here. Again, we have a fair value gap down here. This is an area where I think we could hit. Fair value gap. I know in a couple of videos I kept saying full value gap. I also drew this trend line from a while back. So if we continue going up, we'll see how this acts as we continue moving up. We have fair value gaps down here. I think I drew that on the hourly. I'm waiting for a package. I was in the office earlier this morning. And I came home because the package should be delivered today, between 12 and 4. In the meantime, I'll try to trade something I see. We'll go from there. We're also watching the Mag 7. Nvidia had a great day yesterday. $100 billion, I think $5 billion on going into Intel, and then $100 billion into OpenAI. And then you have Palantir piggybacking on everything that Nvidia is doing. Now that Nvidia is building its own AI platform, software platform with OpenAI, we'll see what happens with that. But 100 billion is nothing to scoff at. This could be a good reversal on the day. Again, throughout the day I post on X called RLTW strategies. I think if you search RLTW strategies or at MYKE175, you'll come across my X. It's basically everything I trade, everything I see in the morning prior to market open. I try to keep it updated. But this could be the pullback we've been looking at. Our pullback so far is giving us, since open, we had a double top at all-time high, 110 points already today. So can we retrace that 50%? If so, let's see what the 50% is from today. Is at the top of this zone where the VWAP is. So we could definitely come back up, retest the 50% area. Actually, let's move that to the 50% area, and we will call this the 50% recovery. 50% day recovery. All right, 50% day recovery. These are just levels and zones I put in. Here's the 1 minute opening range from this morning. I traded this, I shorted this at the break at the bottom of the box. At the first break on this, let me show you. At the first break of this candle right here, I ended up shorting the bottom of this box, thinking this candle, this movement would be the next move. But it started to move up. I think I added one more contract there, and then on this candle I added another contract 50% up on that box. So I had 3 contracts short, and we came down. I think I closed it for like $300, $200. It was a really quick trade. And then I scalped again, a couple shorts coming down until we bottomed. That's where I drew this blue line, and we are moving up again. It's 12:18. We kind of see reversals during lunch after a huge movement during lunch, so that is something to consider. You want to go look at my performance, average ring and average losses. This number is skewed because I scalp and I add to the position. Dollar cost average, I guess, is another way of saying it, to a certain point, right? And then I'll hold it as I sense that the market's going to rotate back down. Usually I close my position at like a pretty hard loss, and it ends up going in my favor once I close it. So I've kind of been trying to not DCA so early and adding my positions at the peak of the pain tolerance that I have, when the emotional mindset starts to distort your confidence and your conviction on the trade. So as you can see, my trade win percentage is 72. My profit ratio is 1.8. So that's that. This is my balance before I had that major red day, and then I took the 5K payout after that. So I started back down with 13, and today we are above my all-time high. So this is the new all-time high is today. So I've had this account. I wish there was a counter on days on how long you had the account open for, but I'm around 35 days of positive days. I count them individually. This was my huge red day that I took a 5K payout on this day. And then I was able to trade later on this afternoon after submitting the payout in. But yeah, we're almost done with the month. The month's looking good. So far, 21K for the month of September. Last month is 14, almost 15K, $100 short of 15K. That was a good month for the month of August. Month of September is looking a lot better than August. And I'm hoping that next month is going to be, hopefully I could keep it growing. Here we go, getting close to that 50% area. And that was a good, let's see what we do at this trend line, see how the market behaves. It seems like all the Mag 7s are starting to rotate back up. The ES is starting to rotate back up. Missed out on this move. Let's see if we do a, see if we hit this area and we come back down, retest these areas at 24,942 area. If we retest the 21,942 area, I might go in for a long. We could be rotating. I'm also watching this trend line right here. This is a trend line that I drew on the hour from this low. And here's the trend line. Here's the touch and the break, the third touch, A, B, C, third touch. So I'm waiting to see if we retest the top of that trend line for a rejection, right? So we could come up here like this and retest and come back down. So that's what we're looking for. Seeing if we break it. I'm probably not going to enter a trade unless I see what happens up here. Again, I think that area is going to be roughly the same area, a little bit above the, that'll be below the 1 minute opening range actually. Here we go. I'm waiting to see how price acts down here. We could totally bounce in this area. And I'll probably think about going in for a long right here. Up to the VWAP. That VWAP's not right. That VWAP's not right. There you go. I wish Topstep's charts VWAPs will adjust on its own. Sometimes you have to clear the screen on the 100 tick chart and then come back to it. We have, on the 5 minute, we have 4.6K shares trading right now in the red. NASDAQ has 9.8, 10K, and it's fluctuating between green. This is what I'm talking about. We have a new candle, new 5 minute candle is this number count down here. Right here, this number count down here in the corner. See it? 22. So that's the number I'm looking at on every 5 minute candle. Now we could come down and bounce down here and continue following this trend line down. If we break that blue, if we break this area, we could come down to here. We have this double touch retest on the 100 tick chart. Does that mean we're going down some more? I don't like how the 100 ticks acting. That's a huge 100 tick candle. It's a lot of buyers coming in. The size of the 100 tick candle determines really if it's going to start moving back up or not. And then I'm looking at the volume. Looking at the volume area here. As you can see during lunch, the candles kind of get smaller. That was a good rejection off that trend line though. I'm looking for a move back up to this blue line and then a rejection. Maybe. Let's see if we read that right. I added up here at this rejection, move that down. Oh. Order filled. 95. 25.78. And I'm happy about that move, right? I watched the behavior of the 100 tick chart hitting the top of this blue line. Now we might bust through it because people are trapped. Shorten. But the confirmation if people are trapped trying to short this lower is a higher high here. Right? This higher high here from this lower high, right? We could start building a trend this way in that direction. That's what I'm watching next. And that, if we don't break this low, that's what I'm watching. We have a fair value gap down here. Yesterday's close. I don't know if that's yesterday's close. Let's look. Let's look. Regular trading hours. Let's see. Yep. 19, 23, 22. Was yesterday's close up here? Yeah, that was yesterday's close. This is OBE. This is yesterday's close. Somewhere right here. Right there. So yesterday's close is up there in that area. We're below yesterday's close. We filled the gap and broke through it at open at the 1 minute range. All right, look at that. We trapped people. We have 2.5 minutes left on this candle to see if we could break below this previous low. Yeah, Powell's supposed to be speaking. Let's see what time Powell's supposed to be speaking. 12:35, economic outlook. Doesn't look like we were able to break that low. Look at that drop. Oh, it's acting crazy at 12:35. I'm watching to see if we break this. And I'm just trading off the 100 tick right now. Just waiting for it to break this trend line. You know, you come back up and retest yesterday's close or the 1 minute opening range box. We got this congestion right here we have to break through. We got this 50% recovery on the day. We got the VWAP. It's been hitting the VWAP, tried to break above it, broke below it again. Let's see what happens. This thing could spike before Powell even speaks. You gotta remember it's 12:42. We only got 671 contracts trading right now. Powell's coming up on the stage. See what he has to say. See if we can hear. Microsoft looks like it's bottoming. Tesla looks like it's moving back up from its opening, from its open. We have 2.7K on the upside and 6.1K to the downside on ES. 2.7K upside NASDAQ. This thing might pop up to come back down. We just bounced off a pivot point. The pivot point is at 926. I don't like that indecisive candle. I don't like that indecisive candle right there.
Goods prices, after falling last year, are driving the pickup inflation. Incoming data and surveys suggest that those price increases largely reflect higher tariffs rather than broader price pressures. Disinflation for services continues, including for housing services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news.
We got 10 minutes, 15 minutes before 1 o'clock.
And show up as somewhat higher inflation during that period. But hanging that $1,000 out there, I'll live there. We will carefully assess and manage the risk of higher. They're leaving it there. We'll make sure that this one-time increase in prices does not become an ongoing inflation problem. Turning to monetary policy, near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside. A challenging situation. Two-sided risks mean that there is no risk-free path. If we ease too aggressively, we could leave the inflation job unfinished and need to reverse course later to fully restore 2% inflation. If we maintain restrictive policy too long, the labor market could soften unnecessarily. When our goals are in tension like this, our framework has long called for us to balance both sides of our dual mandate. The increased downside risks to employment have shifted the balance of risks to achieving our goals. We therefore judged it appropriate at the last meeting to take another step toward a more neutral policy stance, lowering the target rate of the funds rate by 25 basis points to 4 to 4.25%. This policy stance,
This right here could have been a reversal right here
leaves us well positioned
to the upside.
Our policy is not a preset course. We will continue to determine the appropriate stance based on the incoming data, the evolving outlook, and the
Could be.
risks. We remain committed to supporting maximum employment and bringing inflation sustainably
showed up at 6740s as well. Those were also filled. Interesting. Ton of volume traded in these prices.
We'll turn this up. This is where it could get interesting. Those were already out.
Yep, this is the spicy part. Agreed.
Take away that podium.
That guy's working real hard.
Good afternoon once again, Mr. Chair. Thank you for those opening remarks and reminding us just how tremendously the world has changed and evolved since you were last.
It's a big 5-minute candle.
President of the Federal Reserve Bank of Boston, Susan Collins, is also here with us today. And President Collins, we have had the opportunity many times.
Microsoft is moving up. Google's moving up.
In this Fed region, of which Rhode Island is part of the Boston region. So, Mr. Chairman, I would ask you to think about your comments reflecting on the.
We could hit a reversal up here.
Of deeply understanding local labor markets. And I'm wondering if in your deliberations leading up to the most recent FOMC meeting, whether there was anything particularly distinctive in what you saw coming out of the Boston engagement.
We could get a 50% recovery back down to hit this area right here.
Around the country, and each of them has deep ties into not just the business community, but medical community, education.
I don't think we're gonna come back down here. I think I was just too early and got into this position. I think we could rotate back up to hit the up above the 1-minute opening range.
It's beige, and we could. They're not the original, and so we get.
Actually, here's a book. There's a physical book.
And I have to say, I don't know of any source of sort of qualitative information that the economy even approaches this. It's just a lot of conversation with a lot of people. I personally find it very useful. Sometimes you look at that book and you see significant regional differences, and this is not one of those times. So, for example, the Boston Fed piece in the last page book talked about lots of spending on AI. Well, guess what? That was pretty common across 8 or 9 of the districts. So, I would say nothing really jumped out from the Boston piece. What you saw was very all around the country. You saw pretty modest growth, wage and price inflation at modest to moderate levels. The economy growing but not fast, and uncertainty, significant uncertainty about federal public policy is kind of weighing on investments and decisions about investment.
We're down 0.22% on the NASDAQ. How much are we down on the ES? 0.19, 0.19.
From the Boston region that will inform your future decision making looking at the static monetary policy.
What I saw from Boston was quite similar and overlapping with a number of other districts. Again, sometimes that's the case where things are pretty much of a piece. Sometimes different regions, particularly if there's commodity pricing, you would see maybe
Apple's coming down a little bit.
regions do differently from other regions of the country. Right now, it's sort of
Again, we could bounce on that yellow line right here.
I would say.
So let's talk
If we break through that, I'm looking at a break even. If we break the break even price at that purple area, we could come down this blue line.
these conditions that banks have made over time.
But the rejection off of the VWAP.
Be looking for in the run-up to the next FOMC meeting, which is in roughly 30 days.
We have 2 goals, as you mentioned, maximum.
Yeah, gold is pushing hard.
Equal goals under the law. So almost all the time, they work together. They complement one another. So, for example, when the economy's weak, something spicy, unemployment rate might be high, inflation rate would be low, and that calls for stimulus from us. And when the economy is really strong and the labor market is tight, that's when inflation will be.
We could bounce here.
So policy might be a little bit tighter. That's almost always the case. Right now, this is quite unusual case.
That could have been my out,
As I mentioned in my remarks, risks to
unless it just trapped people long.
or to the downside and to inflation to the upside. And we only have one tool, which is monetary policy and really interest rates. And really, it's calling for different answers. So for a long time, we haven't adopted a goal to state one of our goals in monetary policy strategy. That says for a long time, it's said that, that when the two goals are in tension, we'll look at how far each one is from its goal and the time it does expect it to take to get back.
I didn't even think it was going to come back down here, but let's see. Let's see if my theory is right if we break this purple line.
Policy rate has been tight because inflation has been above our target, but the labor market is very solid. Now, over the last really 4 months, really over the summer, the labor market has softened. Payroll jobs have dropped a lot, so we can't really say.
I'll just get out.
I think what that told us is
That candle could be grabbing liquidity, but we'll continue watching it because I want to see if my mindset scared me out of that. Look at that. Back to the blue line. So my thesis was correct. And we'll just work on interpreting the chart again on the next trade. But, you know, I did say if we broke the purple line, we'd come down to that blue line down below. And now we're hitting the top of that box.
Some may wonder about the frothiness of the markets
And I had 3 contracts on that.
and also valuations
But that's how it goes, man. This drawdown I took up here is what I was feeling in my mindset, that I just wanted to get out of it once I got into the positive below break even, right? But then I missed out on this profit, which was almost $1,000 in profit with 3 contracts. So we'll wait to see if we pop back up. Nvidia's coming down. We go down that fair value gap, man. I hate when that happens. We go down that fair value gap down here. Now this area is, we hit this 3 times. Let's see what we do. This one broke. We'll go ahead and move this. We'll draw this out from the lowest high.
federal funds rate really
We'll just watch to see if this pivots right here.
not so as it pertains to mortgage rates, correct?
That's right.
And how, let's talk about how the average consumer is
Come all the way up to here and then come back down.
in the intervening months relative to the easing of interest rates and the ability
Man, Apple just dropped huge.
to spend.
So we don't set mortgage rates, but when we change the federal funds rate, it will affect the mortgage rates and also all other consumer borrowing.
Why did Apple drop?
Interest rates that are on a floating basis will move a little bit or even a lot
Why did Apple drop?
based on how it moves. So the people will feel that over time. Also, it's not just these days. The market is pricing in the next 6 months what's going to happen to rates. So this is something that wasn't really the case 50 years ago. Now markets listen to us and follow, and they make an estimation of where they think rates are going. And so they'll price things in. And so
Oh, maybe that's a liquidity pool.
rates will move because of what the market expects. Market participants expect
I'm gonna get out of that because maybe it's a liquidity pool.
changes in rates long before we make the decision.
That was my first loss today. How much did I lose?
Yeah.
170, 180 bucks, 180 bucks.
Have a higher tolerance.
That's a huge red candle. Red volume candle.
So, what we're seeing is
Man, Microsoft's starting to come down now.
are starting to experiment with what they can, how this new set of tools can be used in our operations. It's very early days on that, and I think we have to wait and see. That's a good thing. I know many of the large financial institutions and other central banks, we are asking ourselves, how can this help us do our jobs better? And I think it's going to be a period of experimentation over a period of years. And the history is always that there's a lot of fear that technological innovation will what has tended to happen.
Technologically.
Jack and I are gonna head out so we can make some room for coaching. We're gonna bring in JD. JD's gonna stick around. Hogan are coming in. We're gonna continue to play this, but Jack and I are gonna step out for now to make some room.
There we go. Back to back to even. See if it holds, or if we go lower.
That group coaching form in the chat one more time for all you guys. Get some questions in for us. Okay,
What are your thoughts about specifically agentic AI as a differentiator from generative AI? And how will the Fed be looking at the impacts of
I should just go 10 lots.
participation rate, given the unknown of what could happen with displacement around AI tools at all ends of the spectrum?
You know, our tools work on demand, basically. Lower interest rates, higher interest rates.
I don't know where we were at,
When there are structural changes,
but we did
there's not a lot that interest rates
$5 away.
for that. And so if you're talking about distributional issues or labor force,
I think we're coming down to here. We're coming down to here. Oh man, Tesla's red too. Tesla's starting to drop. Nvidia's starting to drop. It is 1 o'clock. We come down to here. So I'm gonna wait for a lower low and a pop up to here to get back into a short to continue coming down. I think that will be the play. We didn't really break the lower low. That's the lower low down there. There we go, bottom of that box. Fair value gap. Fair value gap down here. We could come back up and retest the pivot point at 926. There's a pivot point at 926. We just made a lower low, so let's go in for a short once it pops up to this area, because it will. See if we break that pivot point. Area of resistance is here. Okay, so we got to break that. We got to bounce off that to go short. We got to touch it. All right, so we recovered our losses from that one trade, and I'm gonna call it. That's it. I might trade a little bit, but I'm gonna go eat lunch. It is 1 o'clock where I'm at, and I'll go ahead and scroll through the performance of the account real quick. But that's how I trade. I draw a lot of levels. I draw a lot of intermediate levels of resistance and supports. I look at the 100 tick chart, and there we are, $2,700 on the day. I might lose that a little bit, and I might make some more. So I'm gonna just eat lunch. I'm gonna continue watching the chart. I'm gonna continue listening to Powell, and I'm gonna edit this video. And with that, you guys be safe out there. If you like the video, hit the like button and subscribe. If you come across my X, I'll put updates on X all the time throughout the day. And with that, be safe, watch your risk, and just trade what you see, and don't trade anybody else's strategy. Just trade what you see, but you're gonna have to learn what you see in the markets by watching the markets. So with that, you all have a good one, and I'll talk to you later. See ya.